Welcome back to the channel, and thank you for joining it today. If this is your first time on the channel, I would like you to share this video, and also I would like you to subscribe to the channel. We're trying to work together to get to the next level. This is the channel where we talk about financial liberty and getting ourselves up financially to the next level, building a generational wealth for ourselves and also for our family. Now, this year, I just want to bring this to us and also to use video to kind of encourage us to let us know the trend and the way, the expectation of the market. The S&P 500, the Dow, all the indices are, and the market as a whole, generally as a whole, what the analysts and what we are expecting. Now, we all know and we understand that this time around, this year, 2024 is election year, and historically, election year usually, bring the market up than most of the year that might be down. So now we're trying to position ourselves and also to be ready for that trend, for that upward trend, for that move. That this is election year, and as the election goes by and comes by, we expect some of the stocks and the indices to do right, to be in an upward trend, and that is why I'm bringing this to us today, for us to be aware of what the history said about that, and for us to if we can, as much as we can, to do more of our research and then make a decision and take action and invest even the more, because we expect things to go up. Now, this 2024 might be a pedestal to the bull run of 2025, 26, 27. And that is why it is very important for us to understand what everyone is kind of expecting, at least the analysts, and also to know what the institution buyers are doing. The big, the powerful, the financial strong companies, and what they are doing. What are they doing? Whatever they are doing, there is possibility that it might be okay for us to kind of mimic what they are doing, and that's why I'm bringing this out right now. Now, let me show you this just for us to be able to understand what I'm saying. Now, if you look at this, just look at that. He said Wall Street analysts are expecting earnings to rebound in the first half of 2024, projecting a 4.6% increase in S&P 500 earnings in the first quarter, and another 9.4% growth in the second quarter. So this is why I think it is very necessary for us to be aware of that first, and also to position ourselves to partake, to rise with this expectation. Because what it does for us, if we do that, is we're trying to buy low, to buy cheap. So if the stock is still kind of low now, then we can buy into it. Remember, the strategy, the plan is to buy low and rise with it. Then we can sell high, and that is how we can build up our generational wealth. We don't want to buy high. Now, sometimes it might not be all that convenient for us to be able to get it at the lowest, because it's very difficult for someone to kind of pinpoint the low of a stock. I mean the lowest. So we can't. So that is why we come out with the strategy of DCA into the stocks, meaning dollar average cost into it, so that we can at least at the end of the day we are going to be to average out. So it's good for us to start taking action right now. So by the time the bull run started in the second next year, or 25, 26, or 27, we already will have bought it really low, and it give us a wider range of growth on our stock. I'm still going to be bringing some other stock which seems to be running right now. If we see it fit for us, that we can look into, even though it might not all be in the sectors which we have identified, because some are running now and we can kind of catch up with those, and those ones that are still kind of slow, which is those growth stocks still kind of slow, not really doing much upward trend yet. So at least the ones that are growing up, we can kind of catch up with it, and we buy ourselves time to kind of catch up with the one that is still moving slow. Now let me show this also, just to buttress what I'm saying about this. If you look at it, it said investor election year worries could be overblown, experts say. So because it's an election year, so some people might think, oh, maybe some candidate might not win as they want him to win, and things might not go the way they should go. So they kind of worry about that. But if you look at it, however, historical data shows markets have tended to rise in presidential election year, with the S&P 500 recording positive return in 83% of the 24 election year since 1928. Okay, so since 1928, average has been 83%. It's been right upward trend, 83%, and that is exactly what I'm saying about that. And if you now go back and let's just look at it, exactly what years are those and how many. So we can look at it like, okay, so they say the S&P 500 gain in most election years since 1928. So if you look at it, this is right here. We look at it, 1928. It's right here at the bottom, 1928. It went up 43.6% in 1928, and in 1932, it went down 8.2%, and in 1936 it went up 33%, and in 1940 it went down 9.8%, and 19.8% in 1944. Now, all the blues bar are positive. Those are the positive. So if you look at it, in 24 elections, they have 24 elections from 1928 to 2020. They have 24 elections. 24 elections. Out of the 24 elections, it has been the stock market has been positive 20 out of 24. Out of 24 elections, it has been positive 20 out of 24, and only 4 of the election years that are negative. So that kind of tells us where things might be going, and I mean 83% of it says it is going to go up. So I'm just saying I should bring this out for us to look into those growth stocks, and now I'm going to be bringing some AI, because some of the AI, they are really doing really well. They are doing amazingly well. So for us to just kind of look into those and see how we can position ourselves into it, and the sector, the growth stock, they still trading kind of sideways. So it buys us time to kind of catch up with those. So this is why I'm bringing this today. Like I've said earlier, if this is your first time here, I would like you to subscribe to this channel, and I would like you to share this video. And also, I want you to comment. I mean, nobody knows it all. We all seems to know it all, and that is why I would like to read your comment. I want you to comment on the video. I want you to say your own opinion and how you see things. Thank you again for joining in today. Thank you for taking time out. Until I see you in the next video, thank you and have a wonderful day.